Almost every investor out there, they do the same thing, blindly trust a system that is rigged against them.
Bitcoin is digital gold of the future, not of the present. Right now, it's acting like a technology stock. I think that in 5 to 10 year periods, Bitcoin will start to act like gold. In investing, you need to be an optimist because optimists are making money when investing.
Robert, listen, one of the cool things about this conversation is you're on the same mission I am, and that is the mission to expose the financial industry. Can you talk a little bit about what it is they don't want people to know?
Yeah, it's pretty simple when you dive deeper into what is happening behind the scenes of the financial industry. And I believe that the biggest secret that many investors or most investors don't know about is the effect of small fees over the long run. So when we see these management fees that are 1% or 2% annually, we might think, that's nothing, that's a rounding error. Nothing can hurt me, if they charge 1% fee. But over the long run, these small fees compound and they rob you of your financial freedom. They can delay your retirement by 3, 5, maybe even 10 years. So this is one thing that I'm constantly talking about also in my book, The $1 Million Decision. This is the main topic, I talk about.
Well, it's interesting because I don't know if it was a year or so ago, I did a whole YouTube video on exactly what you just said about the small fees, because you're not the only one that's bringing light to investors and paying attention to the small fees. Because you mentioned a percent and a half. That's the advisor's fee, wrap fee, management fee, you can call it whatever it is. But a lot of times those advisors are investing you in ETFs or mutual funds, which then also have their own set of 12B1 fees and management fees. So you're not just paying 1% to the advisor. That's just for them to manage the funds. And then you've got the funds inside, unless it's individual stocks or bonds, that you're paying a management and a 12B1 fee on in most cases. But SEC, I can't remember if it was FINRA or the SEC, has an entire part on their website talking about exactly what you just said, the impact of the management fees over time. And it's substantial. Clearly, you wrote a book on it.
Yeah, maybe I can give an example that
Please.
Everybody can understand. Yeah. So if you pay a 1% management fee to your financial advisor or fund or whatever, it sounds small. But it's not just this fee that you lose. You also lose all the growth that money could have made for you over time. So if your portfolio worth is, let's say, 100,000, a 1% fee means that you pay 1,000 in fees in the first year. And that 1,000 is not only gone, it's no longer growing for you. So if the market grows about, let's say, 8% per year, that 1,000 could have turned into more than 10,000 over 30 years. And that's just from 1 year of fees. So if you account for all these fees over, let's say, 30-year span, the total cost is over 120,000 US dollars in lost growth. And that's more than your current portfolio value. So this small 1% fee doesn't really cost you 1,000 per year. It can cost you, or it can delay your retirement by 3 to maybe 5, even 10 years. And that's the tragic thing, that nobody is talking about in the financial industry.
Oh, of course, they're not talking about it. I spent 16 years as a financial advisor, and looking back, I can tell you the goal of the advisory firms, the Wall Street firms, is to take control of your money so that they can control that. They're advising you. They can direct where your funds goes. That is called control. And no different than a bank. We put money in a bank because the bank pays us interest in some cases. But what is the bank doing? They're in control of our money. They're lending our money out. They don't have to ask you what they can lend on. They don't have to ask your permission for anything. Well, most of the time, Wall Street firms aren't doing that either. You put your money in a 401k and it's in a fund. You don't know what you're investing in most cases. Nobody's reading the prospectus like they should. But I love that you talk about those small fees because that is the perception.
And in my book, one of the most quoted lines from my book is, investing is simple. It's the financial industry that works hard to make it complex. And if they make everything so complex that people feel that they cannot do it on their own, of course, you will give control to them. And when you give control to them, of course, they are making money and you are not making money. So that's the story.
Well said. And when at the firm I was at before I retired and sold my practice, we used a software called Morningstar, pretty sophisticated
Yeah.
software, but it would spit out reports, client reports. I want to preface, these were reports for the client. No client could understand anything. They'd look at these graphs, all the wording, the numbers, and they didn't understand it. They're just like, okay, great. And, we made such a big deal of that. So you're right. The financial advisory world does a really good job of taking something that is very simple and making it ultimately very complex, which is why you're so popular. You've spoken and helped tens of thousands of people. I know you've shared some massive stages, and I
Yeah.
always tout the stages I've been on, but you've been on with Robert Kiyosaki, you've been on with
Yeah.
Gary Vanderchuk, the legends of Brian Tracy. I mean, what an honor
Yeah,
there.
Brian
And
Tracy is my good friend. I hosted 3 seminars with him in my home country, Slovenia, in the beginning of my career when I was still, I was an entrepreneur. And at that time, we were organizing business events. So this was my second business. My first business was website design. This was around the year 2000. And then I went into business training. And this is now my third business, where I am investing educator. So yeah, I know Brian Tracy very well, and we are good friends.
so how did this whole thing come to be? Because you don't, my story is I was an advisor for 16 years, which is kind of where I learned and then unlearned and then relearned the right way to do things. But you weren't an advisor because you were doing websites and that. So how did you
Yeah,
kind of figure this out that holy cow, they're robbing us? These small
yeah.
fees are robbing us. How did you come to this consensus in your journey?
Yeah, it's an interesting story. I was growing up in Slovenia, and I still live in Slovenia. It's a great country to live in. It only has 2 million population. And when I was growing up, it was still a part of the communist bloc. And I can still remember, when I was a teenager, we never had money at home. My father, he was a very tough guy with this Jimi Hendrix hairstyle. Whenever I asked him for something, the reply was always the same. Robert, we don't have any money. We cannot afford it. So maybe that was the reason why I always dreamt about a better life, about becoming someone, about maybe starting my own business. And when I was a student, the idea popped up, and yeah, I started my own business from scratch, and this was my first web design business. And after 5 years of hard work, all of a sudden, a lot of money was starting to come into my business, and I was very profitable. My business was very profitable. And at that time, I was totally financially illiterate. I had no clue about personal finance and investing, but I knew that I should invest. So I trusted financial advisors and bankers and money managers. And I just gave them all my business profits year after year. And after years and years and years of doing that, my wife, Sarah, said, Robert, I know that you trust these guys, but maybe let's just check what is happening with all that money, with all these investments.
Always the
So that
women that catch these little details, isn't it?
yeah.
My wife's the same.
Yeah, it's always the same. I'm very thankful that I have her. And then I ordered all these account statements. And when the envelopes arrived, it was like, what? Are there some zeros missing? Money that I worked hard to earn was mostly gone.
Oh,
And I was totally devastated. I lost motivation to work. I was depressed. It was really a terrible time. But I was lucky that we already signed an agreement with Brian Tracy to have his third seminar in my country. And after that seminar, we went to dinner, and I told him all about my problems. And Brian Tracy, at that time, said something that totally changed my life. Robert, it doesn't matter how much you earn. All that matters is if you have the skills to manage your money and to invest it. And at that moment, I realized I don't have these skills. I blindly trust the financial industry. So at that moment, I made perhaps the most important decision of my life. I will become one of the most financially literate people in this world, no matter what. So that was the start of my financial education, the start of my uh, 7 years of educating myself about personal finance and investing. So I read more than 300 books. I talked with a lot of financial industry insiders. I attended all the best workshops and seminars around the world. And yeah, I was really working hard to learn all these things that are happening behind the scenes of the financial industry. And then, of course, I finally was able to get my investments back on track. I didn't hire any financial advisor anymore because I knew how to do it on my own. Yeah, I realized that everything is very simple if you know the right details. And because most people don't know these details, I was seeing, a lot of entrepreneurs and busy managers making the same mistakes that I did in the start of my investing career. That is why I decided to go into investing education.
And is it weekly or you do like a free webinar or a free training on a pretty regular basis, do you not?
Yeah, I am constantly doing a free 90-minute masterclass where I teach investors or people who want to invest. I teach them all about long-term investing, about how to invest in the age of artificial intelligence and excessive money printing, how to check fees, how to select the best possible long-term products, how to avoid making big mistakes that can cost you tens of thousands or hundreds of thousands of dollars over the long run and so on. So yeah, it's a great event, and I'm constantly running it.
I hear a lot of people talk about their master classes, their webinars, but that one sounds incredibly valuable, like just on the
Yeah,
things. And
it's
that's not,
it's it's not just a sales pitch, because most of these webinars are just sales pitches. It's like 80% pure content, a really valuable content, and then of course also I of course introduce my program that people can join, but it's totally optional. So it's like 80% really amazing content and only 20% my selling my investing program. Yeah.
well, folks, we'll put that up in the description. So if any of you want to
Yeah.
join for that free masterclass and learn that stuff, then by all means, I think that would be great because, you said a couple of things, and I've been doing this 22 years now. And, investing really is simple. Money is actually quite simple when you understand the fundamentals. And really, it can be broken down. I mean, if you go back to the Richest Man in Babylon, a great book, easy
Yeah.
read, a little difficult to kind of understand the difference in the language, but
Yeah.
it really comes down to there's 6 key laws to wealth. In there, they call it 7 rules to gold, but you can convert that to 6 laws of wealth. And the third law is quite simple. It's protect your wealth. And the best thing it says is only invest in things you like, and you understand. To which
Yeah, you
you
need to
just mentioned,
understand
like
them.
that's it. You didn't know, like, or understand anything those
Yeah,
advisors
I
were
didn't.
investing.
Yeah.
That when
I,
you
I
got
was
the
just
statements,
blindly trusted these guys, and I didn't even have the slightest idea what are they investing, which products are they investing my money into.
but that
And a lot
makes you
of
like
people are
every
like,
other investor, does it not? Like
yeah,
almost every investor out there, they do the same thing, blindly trust a system that is rigged against them.
yeah. Recently, I read a very interesting story about a very famous tennis player, Boris Becker. He was one of the top tennis players in 80s and 90s. And he 5 years or 6 years ago, he declared personal bankruptcy. Why? So he made more than 70 million in his tennis career, but then he lost all that money. And the main reason was that he invested in all sorts of opportunities that later he found out that they were basically scams. So he invested in some Nigerian oil companies and stuff like this, and all this was basically fake, was scam, and he lost all his money. He lost all his money. He declared personal bankruptcy. So, and there are a lot of stories like this, people going into short-term trading, trading options and forex and stuff like this, or using some automatic trading systems, robot trading and stuff like this. All this is basically, or 99.9% of these things are scams. Just think about it.
Can we go down that rabbit hole a little bit? Because that's really important. I hear it all the time, especially with our younger, folks around our campfire. They're always talking about like trading, like, oh, I'm day trading or swing trading, and I'm very familiar, or I'm learning options. Like, can you just unpack like the dangers and the pitfalls of those different things that they're doing and why it usually doesn't pan out in the end?
Yeah, that's the worst thing that you can do as an investor. And I know that because I was there. When I was financially illiterate, I also started with day trading, swing trading. I went to London to learn all about it, how to trade and so on. So I went to the best courses. I spent like 30 or 40,000 pounds at the time just to be included in these programs. And then, of course, I lost additional 40 or 50,000 pounds of my own money trading. And the thing was that nobody was making money. I had a lot of colleagues there, a lot of other students who tried to learn how to make money trading. Nobody succeeded. The only people who are making money in this area are basically few professionals who are working with big banks and so on, and are using very expensive systems for trading and so on. High frequency trading and stuff like this, and the financial institutions who are very happy that people spend so much in fees when they trade all the time. So yeah, these are the only winners of this game. There was a famous study done where they compared going to casino and short-term trading, and they found out that going to casino is more profitable. And we all know and we all know that casino, the house always wins in the long run, but trading is even worse.
Oh my goodness. I never saw that article. That's funny, but yeah, I guess I could get that. So if any of you are day trading or trading options, just know you might as well just go to the casino and get your free drinks. I mean, it's probably a much better way to make money, or
you will have some fun, at least.
Right. So like if that isn't, all the traditional things people are being told, in that they're investing money in, primarily today, a lot of the wealth is held in 401ks and retirement accounts. But if you go around, you ask, and I'm sure you do, you've served people in 73 different countries, and I've got, tens of thousands of people, same thing. I mean, we have tens of thousands of clients. So the thing I've always seen is when people are putting money in their 401k, if you ask them, what are you investing in? What is the answer you typically would get? Do people know what they're investing in?
Most of the time they would say some funds, mutual funds or stuff like this, but most of them, they have no idea. Just maybe, if you are starting, or if somebody is starting on his or her financial journey, maybe the first thing to dive deeper would be what are ETFs, and what is the difference between ETFs? These are low-cost ETFs. These are baskets of stocks compared to mutual funds and stuff like this. So this would be maybe the starting point to understand the difference between mutual funds, ETFs, the fees that they charge, and so on.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's It's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up. I saw a study, and it was a long time ago, maybe 2, 3 years ago, so I don't remember the numbers, but it did a broad-based comparison of ETFs and mutual funds. Now, mutual funds, the fees are much higher, and a lot of times they'll say, oh, it's a managed fund versus an ETF, which is 100% passive. There's no management. It's just you're just investing in broad-based indexes to some extent. And what this study found, it was a long, term study. It found that the ETFs outperformed significantly the mutual funds, and that didn't even roll in the additional fees because ETFs have you can find very low fees in ETFs, and then mutual funds. I mean, it could be anywhere, especially with 401ks. You've probably seen 401ks, but I see them a lot. And the new 401ks compared to what I sold back in the day, the new ones, they have a lot less investment selections. And the majority of the investments they give the participants are these freedom date or target date funds that basically it's just, they sell it and they say, okay, what year do you want to retire? Because everything's about a day you're going to retire with these retirement funds. Oh, I want to retire in 2040. So they put you in a target date or a freedom date fund that says 2040. And then it reallocates the positions to be more and more conservative.
And stocks and so on.
Which like that sounds like a compelling sales story. Like I'd probably buy into that in my past life and be like, wow, that's actually kind of cool. I don't have to do anything. It automatically adjusts and I'm going to be able to retire in 2024. That's the psychology. But they never tell you about the fees and you never read the prospectus. The fees in those are like double any of the other funds. Like, you want to talk a little bit about that?
Yeah, sure. And just a tiny difference in fees can mean a lot in the long run. If you are just investing maybe 5,000 or 10,000, that's like bare minimum annually over the course of your career. The difference between, for example, ETFs and mutual funds can be over $1 million. That's the difference between paying, let's say, 1% management fee and 0.1% management fee. Of course, the difference between these target date funds and ETFs is smaller, but still, you are overpaying them. You are of course losing quite a lot of money by paying these extra fees, and you don't have to.
So after reading hundreds of books and kind of really, really studying these insiders, what are just a couple of the key things? And I know you cover all this in your masterclass, but what are a couple of the key things people should start doing or could start doing that would set them off on the right path?
Yeah, I always give here an example of my wife. She is a very, very conservative investor because she invests only in one global ETF. This is basically a basket of big global stocks, mostly, of course, from the US, because US represents approximately 65 to 70% of the global stock market. And she's outperforming Warren Buffett in the last 2 decades because Warren Buffett, he is quite old. And in the last decades, he didn't have, let's say, some kind of extraordinary returns because he didn't understand technology, and he missed all these big technology companies. He only invested in Apple, I think. He never invested in Tesla, or he never invested in Amazon, Microsoft, and so on, because he didn't understand these business models. And by just investing in a simple ETF, my wife is outperforming the greatest investor of all times, that would be one simple way how to invest, how to start a journey in investing, to just invest in a simple S&P 500 ETF or maybe a global ETF, and that's it, And of course, if you want to be a bit more sophisticated, educated because usually when you become more educated, of course, you want to diversify a bit. You can also add some Bitcoin from time to time, but with Bitcoin you need to also sell it sometimes. For example, one of my best calls in the past was in 2022, because in 2021 Bitcoin went to 66,000, and then it fell in 1 year. It fell to 16,000. So that was 77% drop.
Yeah, that was one of
And
the
at that
halvings.
time, yeah, at that time, I clearly remember Jim Cramer, a famous host on CNBC. He had a show and he was screaming, get out of crypto while you can. And that was basically the bottom. And just one day later, I wrote this to all my members, and I said, Jim Cramer said this on TV. There is a total depression in the crypto space right now. Nobody wants to buy Bitcoin. Everybody thinks Bitcoin will go to zero. And that is why I'm buying it now. So I started to buy Bitcoin at that time. And it was really an amazing journey, because we then sold it at 120,000, 106,000, and 96,000. So we made quite a lot of great calls regarding Bitcoin, and that is why I'm saying, Bitcoin is not something that you can buy when everybody is buying it, because you will pick a very, very high price to get in, and it won't be okay in the long run. So you need to use this reverse psychology of investing. When everybody hates Bitcoin, it's a good time to buy Bitcoin, because. And also, I need to emphasize here, if you want to buy Bitcoin, or if you want to add some Bitcoin to your portfolio, you need to understand what Bitcoin is. Okay, so you need to do some learning. But today this is easier than ever, because you have ChatGPT, you have all these other AI tools. You can just ask, what is Bitcoin? Can you explain Bitcoin in detail for me, or something like this? You can talk with ChatGPT and really dive deeper into what is Bitcoin and so on, because Bitcoin is quite young, and it's still acting like a teenager, going up and down like crazy. Compared to gold, gold is like, let's say, a safe haven asset, because it has been around for thousands of years. Bitcoin is digital gold, okay, but digital gold of the future, not of the present, because right now it's acting like a technology stock. But I think that in 5 to 10 year period, Bitcoin will start to act like gold. Okay, but it's not there yet. But because it's not there yet, there is still opportunity to get great gains. But you need to understand all these things. So yes, you can diversify your portfolio also in Bitcoin. You can also diversify into some individual stocks, but not just one or two. I personally, I'm diversifying into 15 to 20 additional stocks, individual stocks, that are more about disruptive technologies. Companies that are really innovating like crazy and so on. So this is one way, or a couple of ways how to diversify. And later in life, when you are maybe, 60, 65, you can also diversify into bonds to give your portfolio a bit more stability. But before that, I don't see any reason why anybody should invest in bonds. Because if you have a time horizon of at least 10 years, it's very, very, very low probability that bonds will outperform stocks, over 10 plus years. So
Do
that
you
is
mean
why.
stocks will outperform bonds?
No, there is a very probability, very small probability that bonds will outperform stocks
Oh,
over
gotcha, gotcha,
10 plus
gotcha.
years. So stocks are always, almost always, if the world doesn't end, if the aliens don't invade, then stocks will very likely also continue to outperform bonds over 10 plus years. If you have if your time horizon is at least 10 years. And that is why I don't see a big reason why I should invest in bonds before I'm, let's say, 60 or maybe even more. Because our life expectancy is, of course, getting longer and longer. And if you are now, let's say, 50 years old, you will probably live until 90. So you have a lot of years in front of you. So yeah, very little reason, why somebody should buy a lot of bonds, when you are, let's say, 50 or 40 or something like this.
Well, one of the things you had mentioned earlier that I really want to dive into is AI. I mean, a lot of people
Yeah.
are comparing the times we're in to that of the Industrial Revolution. And, it's a technology revolution. It's a race, it's a race to compute, I guess you could say. But
Yeah.
AI is such a fascinating thing. It's a scary thing too. And, we're really leaning heavily into that from a company standpoint, from just an investment into our company's infrastructure with AI. Like, talk a little bit about how you're viewing AI and how you're viewing the future, because there's a lot of people that are saying AI is in a bubble right now. And I kind of look at everything you said about Bitcoin. I completely agree. And to what you said about Kramer, there is, I believe, there's an inverse Kramer ETF that literally
Yeah.
invests in the exact opposite of what Kramer does. And that ETF is crushing it. So to your point, yes, and do the
Yeah,
top.
Kramer sometimes he can be a really good contrarian indicator. So yeah.
Good point. Good point. But
AI, yeah,
yeah, let's get
interesting
into AI.
question. Yeah, many people are comparing AI or AI bubble. They are calling it to dot-com bubble. But I think that there are a lot of differences because in the dot-com era, there were a lot of companies that had zero revenue, big losses. These were not profitable business models, like the most famous was like pets.com or something like that. So these were basically companies that were just created because of that boom, and they had no business model, nothing. Now it's quite different because a lot of companies who are let's say AI companies are highly profitable. They are growing like crazy. Also, if you take a look at all the big companies like Meta and Google and so on, who are incorporating AI into their business models, these are highly profitable companies. They have enormous cash flows. So comparing that to dot-com bubble, I don't think that this is a good comparison. So I don't think that we are in some kind of bubble because there are fundamentals. Fundamentals are there, profitability is there, money is there. And this is the big difference, So yeah, AI will change, is already changing the world. It will change the world even more in the future. But I don't think it will render workers useless or increase or that AI will increase unemployment by much and so on. I think that the world will adapt. People will need to find other ways how to add value. New jobs will be created and so on. So it's always the same, when a certain new technology becomes a part of our economy and civilization. everybody is scared that there will be no more jobs. Everybody, machines will take over and so on. But these fears are usually they don't have any good base. So companies will adapt. Of course, maybe there will be some less people working in accounting, or maybe less people who are less middle management and so on, less programmers. But people there will be new jobs, created. And right now we don't even know what kind of jobs will there be, but they will definitely be. So I don't see a world where everybody would be unemployed and AI would do everything for us.
I agree. And I think history is a guiding light for that, because you can go
Yeah,
back and you could say the assembly line. People said the
yeah,
same thing. Oh, no one, people aren't going to have a job in the future because of the assembly line. And
yeah.
then robotics in the
Yeah,
manufacturing.
the same
You could
with
just keep going. The computers, the
agriculture.
internet, yeah, all of it.
Yeah.
They always predicted, oh, this is going to make it so that humans don't have jobs, and all it's done is created more
Yeah,
jobs, just different.
media needs to have some bad headlines, some scary headlines to make some money.
Oh
So
yes,
that's
yeah,
always the case.
yeah. The world's always ending to the media companies.
Yeah.
That's why I don't watch the media at all. And
Yeah,
as
this
we
is why
get
I always say that in investing, you need to be an optimist. Because optimists are making money when investing. And if you are constantly a pessimist, if you think that the next crisis is just around the corner, and if you are like some, let's say, experts, who are predicting the biggest stock crash in history every single year, if you believe that, then you will never make money because you will be out of the markets. You will never make any gains because you will keep your cash under the mattress or in bank, and that's the thing, that optimists are making money when investing, and of course pessimists can sound very smart, but usually they're wrong.
And I want to finish this up with two things. Number one, what is the financial success program that you have, the financial success formula, if you will? And then also, can we just talk a little bit about your book? So the formula, and then tell me, what would people learn by reading your book?
Yeah, maybe first the financial success formula. Financial success formula is also a part of the book. So let me just summarize it. You have two parts of this formula. One is money making skills, and the second part is investing skills. And if you have both, then you can be financially successful. So you need money making skills and you need investing and money management skills. If you don't have first set of skills or the second set of skills, you will have a hard time becoming financially successful. So, for example, if you have great money making skills, you know how to make money, but you are totally financially illiterate, like I was. That was also a part of my story, and Boris Becker, and also Mike Tyson, and thousands of other very successful people who knew how to make money, but then they lost it because they didn't have investing skills, they didn't have money management skills, personal finance. They were not financially literate. And that can be a big problem. So you need both, And on the other hand, if you have no money making skills, if you don't know how to make a decent amount of money, you will always need to invest maybe, I don't know, $50 per month, and it will take like 180 years to become financially free. So it's a bit too much, So my financial success formula talks about that you need both sets of skills, and you need to be very aggressive when building your money making skills. So if you want to make a lot of money, you need to be a more risk taking. You need to be aggressive. You need to learn a lot of stuff: how to sell, how to market your business, how to communicate, how to present your ideas, and so on. How to negotiate, how to lead other people, and so on. So you need these skills to make more money. If you are not lucky and you are not Michael Jordan. Or something like this, but most people are not. And when it comes to investing, you need to be much more careful. You need to be more conservative, because if you are too aggressive when it comes to investing, you will, of course, end up trading away all your money. You will day trade and you will lose all your money and so on. So, yeah, you need to be aggressive in the first part of this equation, and you need to be conservative when it comes to investing and managing your money. And this is the formula how to become financially successful. So that's, like I said, this is also a part of the book where I dive deeper into all these topics. I talk also about the fees in depth, how these small fees affect our long-term returns. I talk about the biggest mistakes people make when investing, when managing their money. So it's a very easy to read book. And also a bit funny, because I try to make this complex topic of investing, I try to make it a bit entertaining. So I added a lot of small jokes and funny stuff in the book. So yeah, it's well worth reading.
That's good. Yeah, because the financial industry and all this stuff is boring. So I try to do the same thing
Yeah.
and add a little bit of flavor and fun to it. So I'm glad you did that. And I love
Yeah.
the thing you said there. And I want to make sure my audience understands this. You know, you did a really good job of explaining the difference between being rich and being wealthy. So you had mentioned some names everybody knows. We'll namely use Mike Tyson, because I think everybody knows, like, he made,
Yeah.
I don't even know how much money he made in his boxing
I
career.
think it was around 500 million or something.
Hundreds of millions of dollars.
Yeah.
So much money that, like, it's almost uncomprehendable that you could lose all of
Yeah.
that. But he did. He lost it
Yeah, he
all.
did.
Okay, now
Yeah.
he's making it back. But that is the definition of rich. And there are a lot of rich people, all of you will come across. They look rich, they got the fancy things, the fancy clothes, they talk fancy, they dine fancy. But when you peel the onion, I've been doing this 22 years, I've seen this too many times to ignore it. That is not wealthy. That is rich, and they are usually the next poor person. I don't mean poor, but they usually lose their wealth. The people who are wealthy are usually quieter, but the one thing they've learned that the rich have not is how to keep their wealth, how to keep their money. And that is an entire strategy. And I know you cover that in your book and in your masterclass, but that is the fundamental difference. Rich is people that are really good at making money, but they have not learned how to not give it back. Wealthy have learned how to not give it back. And if you want to just kind of learn from one of the wealthiest families in history of how to do that, the Rockefeller family.
Yeah.
They give nothing back, and every generation that goes by, that family is wealthier and wealthier. And there's not one thing that could happen that would change the dynamic of that. Where the Vanderbilts, one of the wealthiest families throughout history, the second generation, they were wealthier than the first. The third generation wiped it all out. So rich versus wealthy, and I love it. So with wrapping this thing up, like I said earlier, folks, we're going to put the link for the masterclass above, and also I'll put the link up there for the book. So make sure you grab a copy of the book, and also get in. How often do you do that masterclass?
It's a couple of times per week. Yeah.
Okay. Couple times a week. So folks, you got no excuse to not join. You can be like, oh, I got this going on. Oh, I got to work. Oh, I got to take the cat to the vet. Couple times a week, make the time to get on the masterclass. Robert, this has been a real pleasure having you on. Thank you so much for taking this complex topic of money and building wealth and bringing it down to literally a simple success formula. So folks, with that being said, thank you for joining me. Robert, thank you so much for your time. And like always, join us.
Thank you for inviting me.
Oh, you're very welcome. And folks, thank you. And join us for the next episode of the Money School Elite podcast. Until then, have a good day.